Thank you a lot, Stefan. I'm glad to be here tonight. I hope I can move you a little, not as much as these guys could, but maybe money moves at least the mind a little. We all grew up in a world where banks told us what we could buy, what product was on the market. We had not very much of a choice. We were patronized on the one hand. On the other hand, we also expected good advice all the time. And we wanted to have high returns. And there are some correlations in there and things that makes it difficult to bring it all together in one picture. So when things went wrong and we didn't get the returns and had losses, we went back to the banks and we reverted for compensation. Now, naturally, banks reacted to that and they offered us boring products. Unless you signed off all types of exemptions, then they would admit you to some more risk. There was a very uncomfortable, regulated surrounding in which we had to live and do our investments. Now, in order to enhance profitability, in private banking, structured products were introduced. And they offered the banks the opportunity to earn more money. So in order to enhance profitability, private banking products were introduced with structured products. And they were developed in-house in order to earn higher commission for banks. Now, derivative products have been introduced and developed in huge numbers and volume. And the volume of derivative products in 2010 was 9 times bigger than the gross domestic product of the whole world. Now, this is something you really have to chew on. Derivative products, which is a synthetic financial product, mostly not connected to the real world, is 9 times bigger than the whole domestic product in the world. Now, give you an example of how ridiculous things can be. You can, for example, buy a derivative product that is calculating or speculating on when a tornado hits the US coast. If you got the right time span, you earn money. If not, the bank earns money. This is gambling in the purest form. Does it have any context to the real world, to the economy? Not whatsoever. Now, the other booster to profitability for banks was to spin your portfolio. Turn it as often as you can. Come back to you saying you have to switch from stock A to stock B. Now, what was the reason for it? There was no real fundamental reason for it, but there was commission to earn for the banks. You didn't have much of a choice. You were in their hands, they called you, and you had to do things. You have to buy the products they offered to you, and you had to do the things they advised you to do. Now, discount brokerage offered you some escape from that system. However, you had no choice in product. You could only buy the product that was already on the market. Some segments, and many interesting segments, have been foreclosed for the average private investor. They only were open to the high net worth individuals, to institutional investors, but not to us, the crowd. And my view of the world is a different one. I think people are self-determined, and I think people earn their money, and they can also spend it. They don't need anybody to tell them what to do. Now, talking about us, the private individuals, do you know how powerful we are? Never has there been more wealth in this world, especially in the Western world. There have been no wars for a very long time. There has been no hyperinflation. There has been stable currencies. And we had a positive economic development with heritage from generation to generation, and an enormous wealth has been built. Now, if you look at that, you can see that the private wealth compared to the federal budget in Germany is a little bigger. We have 10,000 billion of private wealth compared to the federal budget, which is 300. Now, there are a lot of implications to that. One is, we, the private individuals, are the most powerful player in the game. It's not the politics anymore, the politicians anymore, but I fear they haven't realized that because it would mean a loss of power to them. If you see, for example, in the last economic crisis or financial crisis in 2008, that you had hectic decision makings over weekends, and they always had to come to conclusions before the markets in Japan opened on Sunday night. You saw who was driving the politicians, but they don't still realize it. However, we could talk about this a lot. There are other implications to it, but I want to say that there is the implication I want to allude to is on financing and what we do. And I think there's a lot of pressure on the valve concerning banks and product worlds, which they offer to us. And I think banks haven't served us adequately. And we, the consumers, have to take things in our hands. So I think with the crowd movements which we have seen in the web taking place in all types of areas, I think the dominance of banks will not continue to be there. Things will be changing. So dissatisfaction in the corporate world is also there. If you're a small and medium-sized company, you only have limited access to interesting product because there's not enough fees to be earned. So you get the plain vanilla product, and if you want to get financing, you have to have securities on the other side in order to get the financing. But that's a chicken-egg issue, because if you have sufficient securities, you normally have some wealth and you have access to liquidity, and you don't need banks as much as you normally would. So that is not really solving the problem either on the corporate world, to make it very easy in that sense. So for some good reasons, but also for some bad reasons, many banks do not longer fulfill the economic function that they have. They should provide financial products that fulfill the demand of the private investor and the corporate world, and they don't do this. This is the bad news. The good news, however, is things are changing, and we can change the landscape of financing. We, the crowd, have started a revolution in the financing via the web. Do you remember just a few years ago when e-commerce started? Did you imagine how big this movement would be? Now, if you look at how e-commerce developed in Germany, probably 10 years ago, you wouldn't even dare to give your credit card number to an online shop. E-commerce serves several needs, much better than the traditional retailer. You have a good selection, you have price transparency, you have convenience of delivery, you have 24/7 availability. So the new world can overcome deficits which couldn't be served in the old world. Now, the web also offers solutions to the problem of financing. And this started with charities and donations. If you take, for example, the election campaign of Barack Obama, which had a budget of about $1 billion, almost half of it was crowdfunded. The phenomenon expanded into music, film, and literature. You could imagine all types of dividends, dividend in kind, giving you a DVD, a CD, a book, a ticket to the premiere, or just to a poster that has been signed by the artist. Next, financing reached the private individual. People thought it reached a private individual in their personal financing. People thought, when I put my money to the bank, I get 1% of return. If I want to borrow money, I have to pay 10% or 13, 14%. Now, what the hell happens in between? Can't we do this better ourselves? So peer-to-peer lending platforms started to crop up and solve the problem. And in Germany, this has been growing. In the US, about 25 to 30% of financing is only done by banks anymore, and the rest is done by other alternative ways. Another interesting development can be followed on Kickstarter. Amongst other things, you can see funding requests for product ideas or prototypes. Now, would you have imagined that the ostrich pigeon would raise $195,000 to be produced? I certainly didn't. Now, the groundbreaking development at this stage is, amongst other things, that it can be funded on Kickstarter, that inventors can now present their ideas to backers, and the backers buy into this idea, and then the proof of principle is given, and the product can be produced. Somebody will be found to do the production process. Take, for example, one I really like, this guy from Borkholzhausen here in Germany. He invented a new lighting system for bicycles. Now, if you ask me, I didn't really think the world would need another lighting system for a bicycle. Probably many of the producers didn't think either. And he put his project then on Kickstarter and raised $76,000 for that. And then the industry came back and said, hey, there seems to be a need for another lighting system in this world. And now the product is produced. As you can see, the guy is very happy. There's a revolution taking place in Borkholzhausen, Ostwestphalia. Now, some of you may also heard of this great product idea of Pebble. And there are several aspects to it that make it very interesting, and I want to allude to those. Somebody came up with a couple of pictures showing the idea of having a hand wrist watch on which you can see the SMS, Facebook, Twitter news coming into your iPhone on your wrist. And he just hit the shell. There's nothing in there. There's no technology in there. It was just the idea. And they wanted to raise $100,000, and they raised $10 million with just the idea. Now, of course, this is interesting, and there's another proof of principle that the market wants this product. This seems very obvious. The other thing is, you can also see that the market, the financing market, has grown bigger. We're not talking about 100 euros or 1,000 euros. We are talking about 10 million for one product raised in the internet by private individuals. Most recently, a development has taken place in the US. I don't know whether you have followed that. It is called Jobs Act, Jumpstart Our Business Startups, an initiative done by Barack Obama, who already had some good experience with crowdfunding in his first campaign. He says, we have to change the financing world in the US in order to get seed funding to business startups. On the one hand, we have to reduce the reporting requirements that we request. On the other hand, we also have to change things from the qualified investors. Normally in the US, you could only invest in risky ventures if you can prove that you have more than $100,000 of free assets. And now that has been changed last year, and now the US starts rolling in crowd investing, which I define as the form of crowdfunding in respect to corporates and companies. In Germany, the first crowdfunding platform started, and they offered subordinated notes. They were very successful in doing that. In the beginning, they started with funding 100,000 euros in 20, 30 days. In the meantime, they can close 100,000 euro tickets within an hour. And there are always people complaining that they didn't have a chance to sign. So there, I think, in crowd investing, there are several parallels which we saw in the e-commerce world. There are some benefits to it. There is a freedom of choice if you can invest via the web. Nobody tells you what to do and what you have to do. And if you want advice, you can always still get it. You can ask people that you want to get your advice from. But at the end of the day, you're self-determined in what you want to do. And investors are well informed. Everything is available in the web. You can have micro and macro economic data. You can have market research. You can have comparisons to industries and other companies in the web. So a lot is possible. And just like you see in this conference here, there are online videos and webinars where you can get insights. You can get to know people, how their sentiment is, what their ideas are, and whether you think you would put money on their heads. So for risk investments, private investors do not have to turn to gambling products anymore, like tornado certificates, which I think are really crappy. You can turn and have real risk in the real economy, helping build the economy. So do something powerful to your surrounding, get people into work, get ideas funded, build the economy. You can now invest in a new asset class which has been foreclosed to private equity and venture capital in the past, and banks didn't dare to offer it to you because they thought it was too risky and they could get liable. So private investors can now structure their own portfolio with small amounts, spread it out, take whatever asset they want. And the crowd can support via social marketing, which is a totally new aspect to investment. We are not an anonymous crowd that is grouped by banks and represented through banks, but you yourself can have an impact on the company and the asset you fund. Take, for example, a company that gets 2,000 supporters. You've seen on Pebble how many supporters they had. Now each of them has 100 Facebook friends or 100 Twitter friends. And if the company is announcing a launch of a product or a new service, they can access their shareholders and say, dear co-shareholders, we want to make this a success. Please spread the word and give the news to your friends. So you have, for example, 2,000 supporters. Each of them has 100 Facebook friends or Twitter friends nowadays. You potentially have 200,000 contacts without paying $1 for it. That is really powerful for young and growing companies to build their business and get the support that they need. Financing via the web will be standard for all of us. On the one hand, it will substitute banks. On the other hand, new products and services will develop. I'm very sure about that. And we will see a strong financing market, just like e-commerce, in this world very soon, next to banks subsidizing them. So just imagine, you walk the street, you see an interesting building coming up, and you take your mobile, read a QR code, and buy a share in this building. This is not far-fetched. This will be possible. You can take equities, you can buy into companies, you can buy into buildings, you can buy via products into companies. All that will be possible. Just imagine you go to an investors conference and meet interesting management team presenting their company idea. On the spot, you can invest in this company, get a share, be a shareholder, and be part of their story. Support them by social marketing, support them by funding. All this will be possible. So here's another industry that will be revolutionized via the web. And I think the next revolution is in financing. And we at Bergfirst and our team are proud to be part of that process. Thank you very much.